What's up everyone, welcome to my YouTube channel, and in this video I want to talk about how to increase your win percentages. Now a lot of people fail in trading just because they have a low win percentage, or they try to hold their position for massive risk reward. But with futures, you really don't need to hold your position for too long if you have a higher win percentage. And the reason why I have a high win percentage is because I wait for key levels to get tapped. I look at the higher time frame first. I look at structure before entering. Now, if the structure, or if I'm going against trend, it would just be a quick scalp in and out. And normally I do that when I want to put a trade day inside my funded accounts. So if we go to my chart right here, we are on gold right here, and I had zones drawn out in my Discord group telling people where to sell, where to buy. Now, we do have signals group where I say when I actually enter trade, but ideally I like people to learn and actually look at price action and determine if it's the right time to sell or buy. Now, with these zones drawn out, mentally is much easier because you can now just wait for your levels to get tapped on the higher time frame and then go into lower time frame to see if it's a viable trade. So for example, this is a sell zone that I drew out just because if you look to the left, right, you always want to look for price action on the left side to get more accurate read on what will happen, because a lot of the price action will repeat itself. So we can see that this is a heavy resistance, right? And not just that, and if we draw the fixed volume profile, this is actually our POC. And as price came up on the higher time frame, right now we're looking at 1 hour, you can see we have this price action over here: consolidation, manipulation, distribution. Now it distributed all the way to this resistance here and then rejected. And why we took a sell is because it tapped into POC and price to action looked like it was good to come down. And then if we actually drew our fib here, you can see it's above 50%, which means it's premium and it's a good area to sell, right? So a lot of confluence stacking is what I do. I like to see 2 to 3 confluence before I get in a trade. So in this case, it's hitting my sell level, rejecting off POC, and also it's in the premium area. So it's good area to sell. And then of course you wait for the hourly close, create that wick, and then sell is even better. This is what we did. And if we zoom in a little bit, you can see this wick, very minor, but you can see this wick was above this wick prior, right? So we had a liquidity grab before a flip. Now we can just take the hourly flip down right here for a sell. Now, even if it didn't come down, we have a second tap in our sell zone, and then price just rejected and came all the way down to our buy zone. And this morning in Taiwan, which is PM in America, so you see here rejection off our buy zone and went back up. And this is our POC at the lower time frame. We can check that out later. That's why there's a big rejection. So this was one of the positions that I just got in, and then got in, got out, and then got in again. So that is the reason why we need to draw out our zones, because now we just wait for zones to get tapped. Now yesterday in the PM session right here, we can see if we map out the 1 hour candle here, we have a liquidity grab, right? Liquidity grab, and then we waited for this flip right here. Originally I want to wait for this hourly flip. I believe I was actually looking at the 15-minute at the time, but we saw the liquidity, but I want this to break the lows. So we actually, after it wicked up, we got in here. On the lower time frame is clearer, but you can see we have this candle range drawn out. We had a breakout, and that's how we got in on this buy here. So you just have to have confluences stacked up to give you a higher win rate, and don't jump into trades right away, because many times you're getting in too early and it may be too impulsive. But if you wait for key areas to get tapped, liquidity grab, and then trend change, then you get a good trade. So if we go to the lower time frame, we can see here we had a drop, we took liquidity, we came down. Now this is actually the trade New York that we took. We saw that liquidity was grabbed, and then I was telling people we want to have this trend line break before entering. So we had this break retest, and that's where we entered. Originally I want to have this area being tapped as my TP, but we took partials and trolled up and got trolled out, which is fine. It's still a valid trade, right? Because we had this support here. Now we can only manage risk, right? We don't know where price will be going, but at least we got in and got our trade and got out. And this morning we saw this huge massive rejection. After this rejection from the POC, and then I just got in right here on this buy, right? And the reason was because we have this structure here, this order block, POC, and then support, rejection, we got this buy, and then another one here, right? We have to leverage different confluences. Basically right here, we have fair value gap, right? Rejection off fair value gap, pull back, and where did it pull back to? If we draw our fib, that's 0.618. So this rejection pop up, this breakout is actually where I got in, right? This breakout, got in, got out, got partials, which is fine. It came back down. We just look for another trade again. So we just need to scalp the market, get our profit, and look for next trade. So always wait for your confluence to play out. A lot of people would have been catching this drop, right? Catching this falling knife. But if you actually wait for candle closures and wait for the right setup, it's much easier. So some people might be getting in here, but right here it's a bear flag. You don't want to get in on the bear flag because that's just a drive down. And then also another confluence reason why we got here was it was the 15 flip, right? We waited for the 15. Let me see. I think it was the 15 that we saw. Yeah. So this is the 15 right here. And then we wait for the next candle to tap in here for rejection. And that's where we saw the breakout buy, right? So even though it didn't hit our TP, we still got our portion of it, and it's still a good trade. But we have to scalp it just because this is the bullish momentum that we saw, but overall in the higher time frame is still bearish. So that is why we have to manage closer on this position than the one over here, right? This one we can let it ride a little bit because we're with trend. If it's against trend, normally I will have tighter stops and then I will manage quicker, like these positions here. So this is just a quick video to show you what I look at. It's not really a strategy video, but just a video to show you stack your confluence. Don't get in too early. We just need a piece of that profit. We don't need to catch the falling knife. There's always a portion that we can get, which is much safer. And sometimes you might only get 5 points, 10 points. But if you constantly stack those wins, increase those percentages over time, you can see a larger profit, and also you'll build up that funded or eval and eventually get payouts. So just be content on the profit. Don't worry too much on how much you should be making every day, but just make sure you're sticking to the plan and then making the plan work for you, and wait for the price action to come to you and don't chase it. And if you do that, you'll see a much higher win rate. So I hope you like this video, and make sure to subscribe and like this video. Comment below if you have any questions. I'll see you on the next one. Take care.